Well, hi there, Andrew Bell with you once again after a very solid month of real estate sales here on the Gold Coast. I've got a couple of pieces of news for you today relevant to the real estate market. Now the first is Standard & Poor's, a global credit rating agency, has withdrawn its threat to downgrade Australia's AAA rating, accepting that both the federal and state budgets are back on track to return to surplus. The decision means that Australia is one of only 10 countries with an unqualified AAA rating from three major credit ratings, Standard & Poor's, Moody's and Fitch. Most important to real estate is that Standard & Poor's are satisfied that the softening in the real estate market remains orderly and will not cause much damage to either consumer spending or to the banks themselves. Now, the latest data out shows that mortgage arrears have moved ever so slightly off their record lows, showing that 0.6% of all mortgages in Australia are 90 days plus in arrears. Now, that's an incredibly low number. Most markets are now recording modest price softening after many years of strong growth. We're in a typical stage of a real estate cycle. Moody's Analytics released their forecast stating that while growth is forecast to be subdued relative to previous years, the forecast is for a relatively mild downturn, with national housing and unit values returning to mild positive annual growth by the middle of next year, 2019. Now, Moody's Analytics forecasts are based on an econometric model which uses CoreLogic's hedonic index data as the base for their forecasts. Their upbeat assessment of dwelling values is based on rising business investment, particularly in the non-mining sector, a rise in infrastructure spending, above trend jobs growth and ongoing low interest rates. Their forecasts are that by the end of 2019, every capital city except Hobart will return to positive annual growth in house values. And of course, these predictions are in contrast to a small group of very negative people who decade after decade predict the worst possible outcomes for the real estate markets. There's quite a bit of attention on household debt at present, but the Reserve Bank in their most recent report said there is no crisis imminent. Now, some really good news to support our balance in supply and demand, which is an important ingredient to the real estate market. And that is that the apartment construction has fallen at its fastest pace in almost 6 years, as developers are responding to this stage of the real estate cycle, as well as, of course, softer investor demand off the back of tighter credit control. The measure of apartment building activity in the latest Performance Construction Index shed 3.9 points to 32.8 in August. A reading below 50 indicates contraction, which of course is what has been happening. And that should take away any of the major concerns people have about an oversupply in the apartment market as we move through 2019 and 20 and beyond. There's also some softening in house building as well, and both of these are vital developments in our current cycle. Another point is new listings for resale properties coming to the market here on the Gold Coast, which has been contracting. There's almost a catch-22 situation that develops. When there are fewer properties on the market, it gives potential buyers with houses to sell fewer opportunities to buy. And so they don't list their properties for sale because they haven't bought something else. And so you get this constant contracting. Again, it's a good sign for the market as there is no indication of any oversupply, but rather an increasing undersupply. For those thinking of selling, it's an excellent time because many people are finding a shortage of stock in the price bracket or the property type that they're looking for. This probably explains why we're having record numbers of sales prior to auction, as buyers are rushing to lock up whatever listings come close to their preferred criteria. By the way, we're just going to show a short video at the end of this e-news, which is the highlights of our upcoming event. It's a really great thing to be part of if you're thinking of selling. Have a good look at it at the end. We will keep an eye out for all the varying reports from credible sources and keep you fully informed as we move forward through the real estate cycles. Until next fortnight, please stay safe, be kind to one another.